Hey everyone, welcome to another episode of the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, with Texas State Insurance Services and Palmetto Life Group. Remember, if you need help with your insurance, your health insurance, Medicare plans, employee benefits, reach out to us at 210-880-5316 or visit us online at txstateinsurance.com with any questions that you might have from the show that maybe brought up with some of the details that we've brought to bring some value to the audience today. We also want to remind you, if you need help with your retirement, Social Security analysis, long-term care planning, or even your life insurance, along with home, auto, and umbrella policies or commercial insurance, reach out to Palmetto Life Group. That number is 877-357-5316 or palmettolifegroup.com. Today's show, we're going to start with some key industry updates, and then we'll dig into a few recent articles that I came up online, even one that I found this morning before even coming into the studio. And I wanted to make sure we talk about some of the updates from prior shows that we had, because a lot's changing as we get close to the fourth quarter of the year, where everybody's updating and changing their health insurance options. After we talk about those topics and some updates and the recent articles, I'm going to bring up why you should consider working with a registered Social Security analyst, an RSSA. They can make a difference in your retirement strategy, or it's a good launching point on getting into and engaging Medicare. So we'll dive into that as well. I am a RSSA. There's only a few of us here in the Central and South Texas area that are truly registered analysts, and we can help individuals really dive in and help maximize their Social Security. So we're going to go over those details and see what we can do to help out with that. The other thing that I want to bring up, and I'm sorry, let's begin with the changes in health insurance and Medicare heading into 2026, because those shifts can affect your cost, your coverage, and your planning, especially making planning decisions for the new year of 2026 because of what we're seeing on Medicare costs rising, plan benefits kind of scaling back a little bit, and possibly even some formulary changes on medications for particular prescription drug plans out there. But the first key update topic that I wanted to bring up was that more than half of the eligible Medicare beneficiaries in Medicare Advantage here in 2025 are on pace and slowing compared to the previous years. The special needs plans for those that are on a chronic condition or possibly for dual eligibles, the competition on those plans have been pretty stiff, and the structures of those plans are going to shift. We haven't seen all the changes for all the carriers and plans there, but we want to make sure we advise you to make sure you plan and update your plan details to where you can see if you need to make any changes. Part B premiums and the deductible increases are projected for 2026. The standard monthly Part B premium is projected to jump from $185 to $206.50. That's up about 11.6%, and the deductible is expected to increase from $268 to $288. So the increases are a little steeper than the prior years, reflecting accelerated health insurance costs and the cost for health care. So you want to make sure you analyze the fact that your Part B premium, which most people still have to pay for with Medicare, that those increases are going up. You could be on a Medicare supplement plan, and those premiums are going up, and you might have to consider looking at a Medicare Advantage option. So no doubt that the premiums for Part B are going up into next year. And again, that's from 268 to 206.50, which is 11.6%, and that deductible is raising from 268 to 288. So really important update regarding the increase of Part B of Medicare. There's another update that I wanted to talk about regarding Medigap plans, or your Medicare medical supplements. We do quite a bit of those with Texas State Insurance Services. And there's a thing called a birthday rule that came out. And these are state specific. Some states are enforcing this birthday rule and some are not. And what this rule allows is for Medigap or supplement enrollees an annual window around their birthday to switch plans, equal or lesser in benefits to what they have, without medical underwriting. Okay. This is huge to double check what state you're in, because if this applies, this gives you the opportunity to shop your Medicare supplement plans when you typically are kind of locked in. I say kind of, most of the time you're locked in because you might have gotten ill or had a medical condition comes up where you wouldn't pass the underwriting knockout questions for Medicare supplement plans. So that Medigap birthday rule is a very interesting update affecting Medicare. So reach out to us for some more details regarding that. But the main point, advice that I want to give to listeners today is if your state, has that rule and gives you the chance to reshop it, then you're going to want to possibly consider it. Okay. Another update that we came across was the marketplace ACA tax credits. These are fixing to expire. I brought this up probably in the past couple episodes because it bears repeating on the individual marketplace plans where individuals over the past few years have qualified for more affordable coverage and incentivized with a tax credit that lowers those monthly premiums, specifically for individuals where they're employed and they're not offered affordable health insurance for themselves or their families, or they needed an opportunity to get their spouse, children, one or the other, or both, on an alternative, more affordable option while the employee stays on the group plan. So, from what we're seeing right now, the enhanced premium tax credits are not expected to renew, and that's going to affect quite a few people. And it's going to affect quite a few of our clients as well. Without these credits, we're estimating that the ACA cost plans could increase at least 75%. That's significant. That's higher than what we were anticipating with this update that I got today. And I had another update that I pulled up this morning that kind of ties into that, because we're facing, once again, another government shutdown looms as funding talks collapse. And one of the things that are at stake on that is the funding from the federal agencies for health coverage. Okay. And that's where those ACA subsidies go into play as well. So we're going to want to keep an eye on that. Now, could they make a change and save the day and extend these tax credits going into this fall? Yes, they could. But we're going to anticipate some disruption there because the carriers might not have to offset that with their plan details that they've provided and already locked in for the new year. So it's going to be interesting once the new ACA plans and those rates are released in the coming weeks on seeing truly if we're going to see a 75% cost increase on the cost of insurance for our clients and millions of Americans on Affordable Care Act insurance or individual plans on the marketplace going into the new year. So want to keep an eye out on that. Other systemic pressure and enrollment shifts, Medicaid unwinding. I haven't brought this up in prior episodes, but I think I might have brought it up briefly. The Medicaid unwinding continues to show many disenrollments for procedural drops in the states that are still processing renewals. So ultimately, what happened was when we had the pandemic, everybody that was on Medicaid or qualified for Medicaid at the time was just getting automatically renewed. Okay. There was no income verification. There was no verification if they had other coverage or credible coverage. People were just sticking on Medicaid, and that worked out for quite a few people. They started scaling that back and bringing in what's called the Medicaid unwinding. Millions and millions of people were losing their Medicare, and a lot of them did not realize it until they showed up at the doctor with a child or themselves and realized that they had lost that benefit. So even from years ago, the Medicaid unwinding is still affecting people regarding the volatile cost of health insurance and coverage and care. So keep an eye if you've got a family member, that's on a Medicaid plan, whether that be a senior, pregnant woman, or even the children coverage. keep an eye on the mail, because if you got an update, you could be losing your Medicaid coverage, and it's going to be time to look at the Affordable Care Act marketplace plans, where Texas State Insurance Services can help you out with that. Let's talk about some high level additional articles that I found out online, and I think they justify bringing up in the show. So NBC Bay Area News record a record number of eligibles for Medicare. So this article that I came across notes the record number of Americans that are becoming eligible for Medicare as the baby boom generation ages. This demographic wave increases the demand of competition of Medicare plans, specifically the Medicare Advantage plans or the Medigap plans as well. Insurers may adjust their benefits and pricing and networks in response to this influx and this peak that we're seeing of a silver tsunami of Medicare enrollments for the aging population. Ultimately, what we want you to know is, hey, there's a lot of people coming into Medicare this year. And not only are people aging into Medicare more than ever this year, you've got individuals that have always been Medicare eligible for years now, and they're finally retiring. They're finally saying, hey, you know what, I'm going to hang it up. It's time for me to, go full-fledged Medicare and look at these plans and options. And what we're noticing is the Social Security office is getting overwhelmed with calls. They're no longer allowing walk-ins. You got to schedule an appointment. Those appointments can take months. So if you are not planning to retire, or even if you're a year or two out from becoming Medicare eligible, I'm going to say reach out to an agency or agent broker to help just lay the groundwork on what to expect in the years to come. You want to be proactive. There's enrollment windows for Medicare that you need to keep in line with, and you want to make sure you don't face any penalties. So this article reminded me to bring up the fact that there's a lot of people coming into the Medicare market right now, so you don't want to delay evaluating your options as more people are competing for those carriers' business. And planning, way ahead of time gives you an edge. I've got clients that'll wait till the last minute, and then I've got clients that'll reach out to us proactively, maybe a little too proactive, where we've got a little bit more time to work with to be able to look at their Medicare options. I brought up a minute ago the Medicare Medigap Birthday rule. This was another article that I found online with CBS News. And again, I think it bears repeating on this. The birthday rule is not a federal, but it's a state level allowance that allows you to switch your Medigap plan based around your birthday without certain underwriting. This article dives in a little bit more onto it. It says about 18 states have expanded this guaranteed issue protection, and some states are allowing a 60-day or a 30-day window. So this CBS article, I wanted to make sure that we added that into the show, because basically the takeaway is, if your state supports this rule, this Medigap birthday rule, then you want to make sure that around that time you shop the plans and see if this is something where you can bounce into a Medigap plan and not have to face any underwriting, because that's typically the linchpin on individuals trying to get into a Medigap or Medicare supplement plan outside or changing from their standard Medicare Advantage or just their original Medicare only, if for some reason that's all they were on. Consumer Affairs, senior face more expensive health insurance in 2026. So this is the third article that I came across that I wanted to bring up. And basically, insurance costs are increasing. The projected rise in 2026, we just talked about this a minute ago. The Medicare Part B premiums are increasing from $185 a month to $206.50 is what it looked like. And that deductible is going up. Not only is that going up, but the plans are going up. And there's costs that are coming on to Medicare Advantage plans as well. There's Medicare Advantage plans that have a cost to that too, not just those supplement plans or the standalone prescription drug plans. So the article really warns many seniors to see the larger out-of-pocket burdens of not just the premiums, but sometimes the out-of-pocket exposure on that as well. Or if you've got a particular medication that could be keeping you from getting a more affordable option. And you do that with a complete plan review. The annual enrollment period is going to open up here in October for seniors to start shopping and taking a look at their Medicare plans. And this article is just a reminder of what we want to let the audiences to plan ahead, run the scenarios now or as soon as you can, or just make sure you're getting in line, because I think we're going to see a record amount of people needing help on shopping their insurance plans. So this article that I came across was actually pretty cool, and I've heard the rumblings on this. I personally have not dived into this as much as I probably should, but I wanted to bring it up because I think we're going to have some listeners and some employers want to learn more about the new child care tax credits in 2025 and 2026. So if your benefits provider's not brought this up, this is probably something you want to reach out to us about on potential new tax credits for child care, which is very important. You can have some key employees that have a family they're raising, and having child care support can definitely go a long way and create that retention that you need for those valued employees. This piece discusses the expansions of the child care tax credits and how families might receive more relief. It may affect household budgets, and thus much of the people can't afford insurance or benefits. Something I want to mention is the reminder of people's budgets and tax relief changes over time. The insurance decisions don't exist in isolation, so we want to make sure that you're already taking on the burden of having to pay for health insurance for your family, and then you have to come up with these funds to cover childcare, which isn't cheap. And something that you want to make sure that you reach out to is seeing if there's a strategy for you as an employer to offer a child care option or reimbursement, and it benefits both the companies and it benefits both the employees as well. We want to remember and remind. We wanted to remind you. Again, thank you for joining us. My name's Justin Holland with Texas State Insurance Services and Palmetto Life Group. You're on the Mad Insurance Show, making a difference in insurance. Remember, if you need help regarding your health insurance options, employee benefits, your Medicare plans, or individual health for your family members and friends, give us a call at Texas State Insurance Services, 210-880-5316, or you can visit us online at txstateinsurance.com. Palmetto Life Group is also our division that handles life insurance, long-term care planning, Social Security analysis, as well as retirement, home auto, and commercial policies. So if you need any help with that type of insurance, reach out to Palmetto Life Group. That phone number is 877-357-5316, or you can visit the website at palmettolifegroup.com. Both companies are statewide, located here in San Antonio and Central Texas, and we service all of Texas, but specifically the San Antonio metro as well as South Texas. And we've got many clients that we've been taking care of. We thank those clients for trusting us with helping them out with their insurance needs. And feel free to give us a call if you need any help with your insurance options. So something that we wanted to bring up as the main focus on the show is going to be visiting with an RSSA, a registered Social Security analyst. Many people overlook the fact that there are strategies out there for claiming your Social Security. And I'm going to go over some of the key points on why you want to have a registered Social Security analyst as your agent. I'm a registered Social Security analyst. I got that designation knocked out around this time last year. It's not an easy certification to get. We're pretty proud that our company is aligned and has a true registered Social Security analyst. There's only a handful in the Central Texas and South Texas area that can assist you with your Social Security analyst. We can get you our credentials on that as well. But it's been really nice to be able to, excuse me, talk about and dive into Social Security because you have to utilize the Social Security portal to engage your Medicare. And it can get a little confusing because you actually can access your Social Security benefits at age 62 in most cases, and it makes sense to possibly wait maybe till you are Medicare eligible or even further for a full retirement age. But it's a case by case basis. So make sure you reach out to us on getting a true registered Social Security analysis review, and we can actually dive into that and see how we can help you out. So the first thing that we'll talk about on considering a registered Social Security analyst or an RSSA is the high stakes that many people lose. So we're going to go over some stats, and then we're going to go what the value is on utilizing an RSSA. 96% of Americans or those eligible for Social Security don't optimize it. Most of the people don't claim in a way that they maximize their lifetime benefit. A lot of times you'll take your Social Security earlier, and you could have had much more benefit over your lifetime to take advantage of. 111,000 is the average loss of estimated to lose. I'm sorry. The average household is estimated to lose over $111,000 in lifetime benefits due to suboptimal claiming. $100,000. It's a lot of money, even over a lifetime. So that average of $111,000 is right off the bat something that you need to consider. Everybody should have a Social Security strategy, but the fact that on average everybody's losing close to $100,000 if they don't maximize their benefit, huge stat on making sure that you want to get a Social Security analysis done for you and your spouse or your family members. You get one shot only on lining up your Social Security, okay? Once you lock in your claiming decision, especially if you claim early and you make those choices, it's difficult or impossible to reverse that. So now you've got some grace periods in between there, but that's about it. But once you lock in your Social Security benefit, there's really no turning back. So again, that's another significant reason on why you want to make sure you sit down and do a Social Security review, is so you can make sure that one shot that you got on claiming your Social Security is as accurate as possible and puts you in a good spot for the long term that can complement your other retirement strategy that you might have in place or your long-term plans that you have into retirement. What a RSSA does differently. So I want to walk through kind of this three-step process that happens with visiting with an RSSA. You're going to have an initial consultation. Okay, you talk about, and we're going to basically the advisor is going to want to talk to the client, understand the entire income situation, assets, situation on the spouse's status, the goals that you have, health insurance cost, and kind of a timeline too on how you might continue working if that's the case, or you might want to start working or stop working earlier than you had planned as well. So that initial consultation is basically data gathering, sizing up the situation, making sure you also like the individual that's going to try to help you with the analysis. Let's face it, that just sometimes, personalities can conflict, and this gives you the opportunity to make sure you like who you're dealing with and who could be doing the review. And that goes both ways on that consultation. After you knock out the initial consultation, you're typically going to run an analysis. The analysis is going to be done by the advisor, and that, as far as we're concerned, as of us in our program that we have as in our RSSA roadmap, we basically have software that we'll plug in all the information and details from you into, and it's going to help us create a model on multiple claiming strategies. Okay. And that could be on, the strategy for your spouse, obviously yourself, delaying survivorship benefits as well. There could be special needs family members that we need to consider in this analysis for your Social Security. And that analysis is pretty slick. So we can actually heat map out where the optimization or optimal time is for one spouse to start claiming and the other spouse to start claiming. So we get really excited when we put these together for clients because we give them a complete review that they can review over a PDF or we can print out and hand to them, and they've got basically what is called a roadmap regarding their Social Security plan and helping them not just look at a paper from the Social Security office that shows you some graphs. We actually outline everything in depth and detail based on the data and the information that you provide us. The third part of basically the three-step process of visiting with an RSSA is the optimization plan. So we're going to deliver that personalized plan. We're going to outline recommendations. There's going to be trade-offs, and then you're going to see basically a timeline on when you want to claim your Social Security. So the initial three-step process for visiting with a registered Social Security analyst, you got your consultation, you got your run the analysis, where we put everything together for you, and then it's optimizing that plan, moving forward, and maybe the optimization could be holding off too. Hey, we're going to hold off on benefits. At least we have a snapshot on what we can expect, and now we know what to do moving forward in the years to come or follow. A lot of times it has to do with just continuing to work. You've got a lot of self-employed individuals out there as well, so they need to consider that optimization more than ever because a lot of the self-employed people out there don't pay as much as what they would as being employed. So those are important to consider too. To help you find the path that gives you the highest lifetime benefit is basically the strategy. We want to make sure we optimize that. And this is a value add. I mean, if you're dealing with an agent, this is why we pride ourselves at Texas State Insurance Services and Palmetto Life Group. We're not just trying to enroll you in a Medicare plan or an insurance plan, and hope you stay on the books and we don't hear from you. No, we want to make sure we provide as much value as possible. And that's one of the reasons why we added the Social Security Analysis Program to our company and to provide that value add to the public and our potential clients. It's come in very handy for our employer groups where we handle employee benefits because a lot of their employees just don't know where to start, much less, their Social Security, their Medicare, and they go hand in hand together as well on claiming strategies. So that has been well received from our group benefits clients that might be okay. They already have a benefits broker. They really don't want to change that, but they're missing the opportunity to provide an exceptional service for their employees for Social Security analysis and getting them a head start on their Medicare path as they age into Medicare. Let's talk about some scenarios on why it matters for your Social Security and why you want to take advantage of an analysis. And we're going to go over those scenarios. I've got a handful of them here. So first off, being married, okay? One spouse may delay while the other claims or takes the spousal benefits, coordinating the timing, maximizing the total household benefits. A lot of times when we do a review, sometimes the spouses have an age gap, and it's going to make sense to hold off on applying or engaging your Social Security distributions versus the other. So when we do our optimization review, we're going to be able to tell you, hey, this spouse might need to claim their Social Security, and this spouse might need to hold off on claiming their Social Security. And when we do that analysis, it breaks everything down so you know exactly what we're dealing with. Divorced individuals, so 62 plus years and older, you may qualify to claim on your ex's spousal record if eligible, in addition to your own, and timing matters. This is something that I think really gets overlooked. You've got individuals that were married for years, and sometimes that spouse worked and sometimes that spouse did not. So leveraging and taking a look at your Social Security benefit and claiming strategy is huge for those individuals that might need to claim based on their ex-spouse's record, that they can, utilize and optimize for their Social Security retirement. So being divorced, one of the biggest reasons for us to do a Social Security analysis to see if you qualify for additional benefits. Widowed. Another scenario is those that are widowed. Survivor benefits could allow you to claim a higher amount, okay, by deciding when or before or after full retirement is critical. So if you're widowed, you want to make sure, again, you do a complete Social Security review and see if it makes sense on possibly postponing, or if it just makes sense, hey, there's not much savings there or increase to the benefit, I might as well just start drawing my Social Security now. So married, divorced, and widowed individuals, very important to reach out and get a RSSA to visit with you and see how we can help you take a look at your survivorship benefits that you need to take advantage of. Single individuals, okay? Single individuals, you don't have to optimize options like having a spouse or survivor benefits. So your own claiming strategy is especially important, okay? Your strategy might not relate to another spouse or dependent. So we want to make sure that we look at that strategy accordingly to your specific situation and incomes and earnings. Self-employed and business owners, okay? This is going to resonate with you. You might have more flexibility in managing your income and reducing your tax drag and planning and contributions. This can affect your Social Security decisions, okay? So when we help out a self-employed or business owner, we're going to need to make sure we dive in and see what was paid in and what their outlook is going to look like as far as compared to being employed or an employee. And there is differences. So if you're self-employed or a business owner, I'm going to highly recommend that you visit with an RSSA, Registered Social Security Analyst. That can be myself or anybody else that you choose. But we're going to want to dive in and help you take a look at that strategy based on how long you've been self-employed, how long you've owned the business. Maybe you're self-employed and you are an employee. So those scenarios are going to come into play as well for your strategy for Social Security. Disability. So here's another scenario on why it matters to visit with a Social Security analyst. Disability. Some may qualify for disability benefits. Understanding the rules and interplay with claiming is key. Okay? There's a lot of individuals that are on Social Security now because they qualified for a disability. Those disabilities are going to vary. Those scenarios are going to be very different for pretty much everybody out there. So disability is another reason why you might want to visit with an RSSA and create a strategy regarding your Social Security optimization. This is the last scenario that I wanted to bring up on why it matters to visit with a registered Social Security analyst. Immigrants or lawful residents. Even non-citizens, if they meet work credits and residency, may be eligible for Social Security. They don't realize it. And that goes hand in hand with their Medicare benefit. So immigrants and lawful residents, even non-citizens, if they meet work credits and residency, they could be eligible for Social Security as well. And a lot of people, many, millions probably don't realize it. So that's another reason if you've got a family member, if you got some parents that are immigrants or lawful residents, let's take a look and possibly see if we can optimize a Social Security benefit for them. We could be leaving money on the table and not realize what benefit they might have access to. Something else that I probably want to add to this review of the scenarios is how the taxation of benefits worked when you're combined with your Social Security benefits and your income. A lot of times you might need to prolong drawing your Social Security because you're going to continue working, okay? And I just had a scenario last week where we did a call to Social Security, take a look at the optimization for that client, and sure enough, because of the income that they're earning, it just made sense to postpone their Social Security for a few more years at full retirement age. So they could also continue working and not jeopardize or lose out or have taxation become an issue on having both benefits of earning an income as well as drawing your Social Security income. The impact of working while claiming is basically that linchpin is going to be full retirement age. Okay, a lot of times that's going to be age 67. As we have, I mean, the current generation or the current individuals that are aging into Medicare right now, in most cases, their full retirement age will be 67. Now, could there be legislation that increases that age? Absolutely. I just don't know what to expect or what's going to come to that as far as Social Security legislation. Everybody asks, "Hey, is it even going to be there when I retire or when I want to access my Social Security benefits?" I can't stress enough. Social Security is always going to be there. It's a pay-as-you-go system. There are far less individuals that are paying into Social Security now versus what there were years ago. So that's going to be, something, a reckoning that's going to take place on updating the Social Security system. And again, there's a lot of ideas out there. If you go into the website, I believe they still have it there. If you have an idea, let them know. They want to make sure they've got the smartest people out there trying to figure out how we can fix the Social Security situation that we might have in the future on being insolvent. That's what a lot of people are concerned about. How to claim timing affects your spouse and survivorship benefits downstream. So I brought up some of those scenarios from being married, divorced, widowed, single, self-employed, and business owners, the disability situation, immigrants and lawful residents. How you claim on every one of those scenarios is going to be different, and it's going to affect one spouse or the other. Especially, it could affect those survivorship benefits for those spouses once one of the one of the spouses has an untimely death. Something that I want to bring up too, as well, is what people overlook and the mistakes to avoid when visiting with a Social Security analyst, or if you're just trying to do this on your own. So, overlooking mistakes to avoid: claiming as soon as you hit age 62 without modeling a long-term impact. Okay, that's the biggest thing. We've got a lot of individuals that as soon as they become eligible to start drawing their Social Security at age 62, they just take it. They don't even do a review. Okay, and it is very important to make sure you look at the long-term situation of your Social Security. I understand if you're not working or you need that other income. I totally get it. But I think it bears repeating on making sure individuals, hey, before you jump on that Social Security benefit when you turn 62, visit with a registered Social Security analyst and just make sure you know what that long-term plan could look like. Don't just base it off of the Social Security statement or your phone call with the Social Security office or advisor. Sit down with somebody. We'd love to help you with an RSSA review and see what that long-term strategy would look like compared to claiming at 62. That could be claiming at 65, that could be 67, or even age 70, where a lot of individuals can take advantage of an extra 30% benefit if they hold off and keep from drawing their Social Security sooner than they had planned. Not coordinating and claiming decisions for couples. Each might act selfishly but lose collectively. So I see this a lot, okay, especially as we're helping more Medicare eligible clients because of the uptick and more individuals aging into Medicare this year than ever before. You've got one spouse that says, hey, I just want to take this benefit and run with it, whereas another spouse might kind of be left in the dark on that, where a strategy could have been formed with both of them, okay? Not saying this is the case for everybody, but I see it a lot where one spouse just went ahead and decided to start drawing their Social Security, and they probably could have sat down with me or another RSSA for a registered Social Security analysis and really dive in to see, hey, should you take that Social Security now or prolong that, and how does that relate to the spouse, and could it affect the spouse? We've seen scenarios where one spouse started drawing their Social Security sooner than they probably should have or could have, and it affected the benefit for the other spouse. And like I mentioned earlier, once you set that in motion, as far as drawing your Social Security, it's really hard or almost impossible to scale that back unless you're within a grace period there. So that's an important point that I wanted to stress on. Not coordinating claiming decisions for couples. Um, you know, each might act selfishly but lose collectively. That's huge. Okay. You want to make sure it's a team. You want to optimize that Social Security benefit for both of you. So if you're a couple out there and you're getting close to Social Security age of 62, or you're already there and just have not addressed a Social Security review, it's probably time to visit with somebody. We'll be happy to help you with that. Failing to run a what if scenario, early death, longevity, living longer. I mentioned this in a prior episode last week regarding life insurance and long term care. We are living longer. We're not necessarily living healthier. And if we're not living healthier, that means we're going to live longer and have more long term costs for healthcare. So, an early death, living longer, or longevity, needing the money earlier. So these are three scenarios that you need to make sure that you run a Social Security analysis to see, hey, what happens if there is an untimely death sooner than we planned during retirement? Let's say we live longer than we expect we do. What does our strategy look like that with our Social Security income that we want to start drawing? And the fact that if you might need to start drawing earlier than planned. So a lot of times we'll look at a scenario and the individual will say, hey, Justin, I want to hold off on my Social Security. But once we do a review, it makes sense to start drawing sooner than they had planned. So that's a great point on why you would want to visit with a Social Security analyst. Overlooking how other income can affect your Social Security. We're talking pensions, IRAs, part-time work or full-time work. These are based on, how it interacts with Social Security taxation. So making sure you're not overlooking your additional income that's coming in to complement or possibly hinder your Social Security benefit. And again, pensions, IRAs, part-time or full-time work, critical in making sure we're not overlooking the other income that's coming in that could affect your Social Security strategy. Ignoring future changes to Social Security rules or legislation, though you must base on the current law. So this point is basically saying, hey, just because this is the way Social Security is right now, doesn't mean it's going to be like that forever. So we've noticed that. I can tell you earlier this year, we had a Social Security review with a client that had moved here from California here to Texas, San Antonio market. And we did a review because of the recent legislation that had changed. And because of that, they were able to take advantage of an extra, I think it was like $12,000 or $15,000 a year in Social Security income. We did that review and they were elated. We were excited too, because a lot of times it's just a cut and dry review. We want to make sure we have the strategy in place. And we usually show how to optimize your Social Security. But when we have those scenarios where somebody's getting an extra $15,000+ a year, that's exciting. And that reason that took place is because of some recent legislation that we needed to consider. So just because you've got your Social Security strategy in place now, might be good to visit with a registered Social Security analysis just in case things change or they revert back to what they were years ago. A lot of changes in legislation when it goes to Social Security benefits, retirement, or healthcare and health insurance. So it kind of goes hand in hand. Keep an eye on the news on those updates and those headlines that come up. Again, we want to thank you for joining us here on the Mad Insurance Show, Making a Difference in Insurance. My name's Justin Holland. I'm with Texas State Insurance Services. We've been talking about some key updates regarding the legislation, how effects are changing for Medicare and other health insurance for individuals out there. But we just wanted to make sure we remind you, reach out to us at Texas State Insurance Services for a health insurance review or an employee benefits review, or if we need to help and take a look at your Medicare. The phone number for Texas State Insurance Services is 210-880-5316, or visit us online at txstateinsuranceservices.com. We've been talking during the show right now, kind of closing out or making the majority of the show on why you need to visit with a registered Social Security analyst. And I am one of those registered Social Security analysts. I am a registered RSSA through Palmetto Life Group. Palmetto Life Group is our division that helps out with life insurance, long-term care planning, retirement solutions as well. And we've added home, auto, and commercial, as well as umbrella policies, just in case you need to take a look at that. We brought that division in just because we had so many clients that we handle the health insurance for or the life insurance for, and they're like, hey, can you just take care of our home, auto, and umbrella? And we're like, absolutely. And we slowly started bringing that in, but we'd love to help you out with that. And if you need to contact Palmetto Life Group, you can reach out to us at 877-357-5316 or visit them online at palmettolifegroup.com. We'd love to walk you through, specifically like what we're talking about today, a Social Security strategy and a review where we can provide an exceptional analysis where you can make some confident decisions. And I think it will complement your strategy on your health insurance, your employee benefits for your employees. Again, we come in and do luncheons and workshops. You know what? I'll go ahead and bring that up right now. We hold a weekly Social Security and Medicare workshop at our location in the Stone Oak area of San Antonio on the north side of town. It's every Wednesday at 12 p.m. If you want details on our Social Security and Medicare review, just reach out to us, let us know, and we'll get you details on that. And we got a little flyer that we send out that is available to anybody in town. Or if you happen to not be in town or can't make it to the luncheon event, you can actually log in remotely and join us, where we're just going to go over some steps on Social Security and Medicare that you need to keep in mind. We'd love for you to join us for some great and delicious snacks over the lunchtime hour that we're doing this every week. And we just wanted to make sure we had something in place for the consumers to be able to stop by and get some knowledge on Social Security and Medicare. We kind of combined that to both. It's at our Stone Oak office. Obviously, if you're going to visit in person, seats are limited. You know, we've got a good amount of room there, but we don't have a ton of room like what we've done at restaurants. So make sure you visit with us on that. And really the topics that we're going to discuss on this weekly luncheon are going to be Social Security regulations, claiming strategies to maximize benefits, how to receive personalized analysis and planning, utilizing myself as a registered Social Security analyst on how you can, use our tools to be able to optimize your Social Security. And then we'll also talk about Medicare. Medicare's Part A, B, and C, and D, your prescription drug part of Medicare, along with other coverages out there, as well as enrollments, the time when you can enroll, when you can possibly change, penalties and eligibility, and future changes that we're expecting in the industry as well. So just wanted to plug our weekly luncheon, whether you join us remotely or you join us in person. And you can visit an RSVP at Texas State Insurance Services, 210-880-5316, or txstateinsurance.com. We'd love to see you there. So the end of this segment that we wanted to do on utilizing a registered Social Security analyst is some examples, maybe some stories. And I've kind of talked a little bit of some scenarios that we've helped out, but we wanted to make sure we hear from you. If you could give us some insight, on, age 65, married, spouse that's turning age 68, what the earnings are going to look like, and the spouse benefits. How would you model your options based off of that? We'd love to help you with those scenarios of what you're facing right now. And sometimes we think we've seen every scenario out there, and we have a client reach out to us and are like, hey, this is something new. We're going to bring in a team in here, kind of take a look at this and bounce this around and see if we can come up with the best strategy. We've got a great support system through our registered Social Security analysis program. But right now, I want to invite you to reach out to us and let us know your situation. Okay. And a lot of times, I say a lot of times, every time we do a Social Security review, it's provided value to an individual or a divorced individual or a team, a couple, on when they can claim, when they should claim, and having a strategy in place. We want to make sure that we walk you through your decision process on that. Okay. The main thing is there an issue with claiming too early? Is there a issue with of claiming a spouse when you should maybe be holding off on that? Which strategies are going to be different for everybody? So claiming early, delaying your Social Security benefits, or how it relates to the spouse, that's a critical point on why you want to do a Social Security review with a registered Social Security analyst. Every case is going to be unique. Okay. I brought up the scenarios of being married, being single, divorced, the disability aspect of that, widowed, your self-employed and business owners out there. Very important for us to visit with you and take a look at your Social Security analysis. And the other thing that we wanted to stress again is if you're an immigrant or a lawful resident, you might have access to Social Security benefits. And the scenario I brought up a minute ago that bears repeating right now is you might have a parent or a loved one or an aunt or uncle that is a immigrant and a lawful resident, and they could be claiming Social Security or have a Social Security strategy that they don't know they need to be prepared for and have in place. So reach out to us and we'll take a look at their scenario and see if there's an opportunity based on the records that we have or we can help them pull up through the Social Security office and complete an analysis for that. So we're pretty excited about that. So we want to thank you again for joining us here on the Texas State Insurance Show. We've got the Mad Insurance Show, making a difference in insurance, to where we're providing value and really talking about key updates on what's going on in the industries. We're going to have hopefully a guest next week that's going to join us, and we'll provide a different segment of the insurance that we're going to bring to the show. We've talked about Medicare and the health insurance changes for 2026. We cannot stress enough, visit with your broker or agent or reach out to us at Texas State Insurance Services for a health insurance consultation. It's a no-nonsense review, no-cost review. A lot of individuals have been reaching out to us and saying, hey, my insurance agent is trying to charge me a fee to do my insurance review this year. And we're like, we don't charge a fee. We're not implementing a fee right now. We do a no-charge, no-nonsense review for your Medicare or individual health insurance, as well as your employee benefits. You know, that's something to consider. If somebody's charging you a fee for that analysis, it might be time to start looking or shopping another agent. We'd love to be that for you. The other thing that we discussed was the changes in the industry. We discussed the Social Security claiming strategies. It's one of the most important and least understood parts of retirement out there. So we wanted to make sure we talked about that. And just also to remind you of how to contact us. Again, Texas State Insurance Services. We have 4 locations in San Antonio to visit with clients and 1 in McAllen, Texas, servicing the Rio Grande Valley. You can contact Texas State Insurance Services at 210-880-5316, or you can reach out to Palmetto Life Group. If you're not needing help on your health insurance or your employee benefits or Medicare, Palmetto Life Group's going to be there for your registered Social Security analysis review with us. So we'll help you out with that. If you're needing help with life insurance, the long-term care insurance, or if you're needing assistance with retirement, home, auto, and commercial and umbrella policies as well. The number for Palmetto Life Group is going to be 877-357-5316, or you can visit us at palmettolifegroup.com. Again, it's Justin Holland with the Mad Insurance Show, making a difference in insurance. We're so glad you joined us for the show. We're looking forward to providing some value and some additional updates next week, and we'll talk to you guys all again soon. Take care, everybody.